So today, we're going to break down a really ambitious investor pitch from a company called Fractal AI Technologies. They're making a pretty bold claim that they've built a new kind of AI telescope for the financial markets, one they think can literally see the future. Let's get into it. Now, this might sound like a weird riddle, but you've got to pay attention to this question. It is the absolute key to understanding their entire pitch. The answer connects the dots between the technology you use every day and one of the most secretive, high-performing funds on all of Wall Street. All right, so here's our roadmap. We're going to unpack this in 5 parts. We'll start with the surprising origin of their whole idea, then define the big problem that they claim to solve. After that, we'll meet their AI telescope, then look at how they actually plan to make money, and finally, we'll ask, what does all this mean for the future of finance? So, first things first, where does an idea like this even come from? Well, believe it or not, it didn't start on a trading floor. It started with the science of understanding human speech. This right here is the core idea behind their entire company. Think about it like this. On one side, you've got speech translation. Its whole job is to take a messy, noisy audio signal and find the clear words hidden inside. While on the other side, that's their approach to finance. They treat all that chaotic market data as just another noisy signal that can be decoded to find a clear prediction. And this connection actually has a pretty fascinating history. It all starts back in the 80s with IBM pioneering speech translation. Then this legendary hedge fund, Renaissance Technologies, secretly took those exact same principles and applied them to the market, and it produced absolutely mind-blowing returns for 30 years. So today, Fractal AI is basically saying, we are the next evolution of that idea, using generative AI to predict the next market move, just like ChatGPT predicts the next word. Okay, so why do we even need a new approach? What's broken? Well, according to this pitch, the old ways of navigating the market are really starting to break down. They point to 4 big pain points in the market right now. First, the old winning strategies, what traders call alpha, they're just not working like they used to. Second, you have billions and billions of dollars just sitting on the sidelines, desperate for a decent return. Third, all the biggest hedge funds are in a crazy arms race for an AI advantage. And finally, you've got these giant super apps that need new, cutting-edge features to keep growing. And the real takeaway here, there is a huge, hungry market just waiting for a solution. And this, of course, is where Fractal AI steps in and positions its product as the hero of the story, the AI telescope that's designed to solve all those problems we just talked about. So, how does this thing actually work? Their secret sauce is a concept they call fractal equilibrium. See, instead of trying to analyze the market's chaos all the time, their AI just waits. It waits for these very specific moments when buying and selling pressure are perfectly equal. And they claim that right at that point of equilibrium, all the noise just disappears, and a clear, predictable signal emerges. And of course, they have the numbers to back it up, or so they claim from live testing. First up, 66% accuracy on what are called mean reversion trades. These are basically bets that a price will snap back to its average. It's a pretty solid number. But check this out. For trending markets, that's when a price is just moving steadily in one direction. They're claiming up to 77% accuracy. Now that is the kind of performance that makes professional traders sit up and pay very, very close attention. So here's how they position themselves against the competition. They're basically saying they're the best of all worlds. Unlike the super secretive Renaissance, they want to be accessible to more people. And unlike other funds that just use brute force computing, they claim their method is way more elegant and adaptive. The pitch is simple. We're offering a scalable, more transparent, and superior alternative, and we'll deliver it all right through an API. Okay, having a powerful technology is one thing, but how do you actually turn that into a global business? This next part is all about the money. So they start by just painting this picture of the sheer scale of the opportunity. Every single day, over $10 trillion in assets are traded. And if that wasn't enough, beyond that, there's another $37 trillion just sitting in global bank deposits, earning basically nothing. This is the vast ocean of capital that they want to tap into. And how do you reach all that capital? Well, their strategy isn't to go one user at a time. No, it's mass distribution through partnerships, which they say gives them a potential user base of 1 billion people. Their business model is broken down into 3 simple tiers. For everyday retail users, a simple software subscription. For the big institutions, they're talking licensing deals and taking a cut of the profits. And for all those super apps, they'll offer a white label version that those apps can just brand as their own. And just to prove they can actually play in the big leagues, they drop this little bombshell in their pitch: having a partnership lined up with the former chief investment officer of a $200 billion fund. Well, that's their signal to investors that they have a real inside track to the very top of the financial world. So if they get the money, where's it all going to go? Well, they're planning a heavy focus on making the product better, with nearly half the funds going straight to research and development. Another quarter is focused squarely on growth and getting new customers. And that brings us to the grand finale of the pitch: their huge vision for the future, and exactly what they're asking for to make that vision a reality. Here it is, plain and simple. They are looking to raise $3.5 million. In exchange for that, they're offering up 23% of the company, which puts the total value of the whole enterprise at $15 million after the investment. And this is the ultimate goal, the big dream. It's not just to be another tool for Wall Street. They want to build the first true artificial general intelligence for finance, and, in their own words, to democratize access to the kind of predictive insights that, until now, were only available to the world's most elite funds. And that leaves us with the final and maybe most important question. If a technology this powerful actually becomes widely available, does it truly level the playing field for everyone? Or does introducing a new, powerful piece onto the chessboard just ensure that the house, in the end, always wins? That's really the central tension in this entire story.